Hello, everybody, and welcome back to another evaluation of what happened to mortgage-backed securities that impacts the interest rates last week. And you see these are the past 5 days, starting here Monday, Tuesday, Wednesday, Thursday, and Friday. So not a whole lot's going on here. And you see that we're still in this tight range. It's been slowly heading down, testing this 50-day moving average, and it's been rejected from a technical standpoint. And Friday, it tested it again and was rejected. So this 101 mark here that represents a resistance point from previous charts is what is really going to be our level of support. Not a whole lot is happening. I think the big thing here is coming off of the December and Christmas and holiday shopping and whatnot. And there's been a lot of talk from the Fed, and there's a lot of conflicting information, a lot of conflicting data that has been coming out. So what we're really looking at is trying to get something that really tells us what's happening in the economy. And what we saw here on this day here, there's an alert to lock because the bond market, there's a treasury bond auction that was actually met with like very little interest. Like there really wasn't a lot of investors looking for it. But even so, it really didn't move as far as you would think it would. And then on Thursday, we got a jobs report, unemployment report that ticked up for the first time in a long time. And you got to remember that a lot of these job data are really kind of skewed because of the holidays and those part-time jobs. But more importantly, the other thing that we're looking at from an unemployment standpoint is that the unemployment rates have not really risen to the point that caught up with inflation. So if people are applying for unemployment, they're really not getting enough money to live off of. So not really having a choice but to go out and get a job. So a lot of the unemployment data is really skewed, and a lot of the analyses now are looking at this going, we really don't know if this is something that we can count on. And then on Friday, we found out that the personal consumption expenditures, which is one of the key pieces that the Fed is actually looking at as far as what's going on with the economy, it decreased and it is actually looking really good. So the overall inflation year over year is continuing to go down. And if you strip out some of the factors that are variable in there, it actually gets it down to close to or just below the 2% that they're looking for. So the Fed actually has to be pretty happy about this. So that gave us a rally. It rejected its 50-day moving average and it came back up. Are we going to see any big shot up? I don't know, but we're actually moving in the right direction. So if you looked at annualizing the last 6 months of core readings, then you're looking at the core PCE somewhere around 1.85%. So even if you annualize this over the last 8 months, the reading's only 2.08. So it's very close to the Fed's target. So they got to be really feeling good about this. So this kind of goes back into the mind. Are they going to cut rates 3 to 4 times this year? The idea is yes, but when? Which is why I think that we're not really looking at a lot of push deeper, because if they're going to cut the rates, we're going to be going up, and the investors really aren't looking to, bet that rates are going to get that much worse. But some of the data is conflicting, so we're just kind of hovering in this range. If we change the timeline, because it's 3 months, and we look at 6 months, then you get a better sense of, compacting kind of where we were at and what rates are doing here. And then if we go to a 1 year, then you're looking at, and it gets a little bit crowded, but you see how we have maybe starting to get what's called a double bottom, and maybe we'll start heading up. You just never know. So we're going to have to stand tight and wait to see what happens. But this goes all the way back in December. So this is the trading range that we are. So back on December 27th, and then for the month of January, it came down, went up, it came back down again. We're kind of at the bottom. Hopefully we're going to be rising back up again. We'll see what the market does, and I will keep you posted next week. If you have any questions, let me know. I'm happy to help. All right, take care.